Hey guys, hello and welcome to Money Control. We'll talk about the metal prices today, where we have started this year on a very positive note. Take a look at 2023 and you have copper prices already up by 4.5%. You have zinc, which is up 6%. I mean, these are a couple of metals which have the best of fundamentals as well. But talk about generic fundamentals first, and it all comes in from China. That's where the buck stops really. You are looking at better demand expectations from there. China seems to be moving away from zero COVID policy, which has been supportive, and there is demand from industrial and infrastructure sectors now coming back. Also, there is some restocking that China is looking at ahead of the Lunar New Year holidays. Remember, China is absolutely shut between 23rd to 27th of January, and most of the manufacturing and factories shut for a couple of weeks during that time. So there is some buying for metals that you might be looking at early before that. Apart from that, China also seems to be doing a lot of liquidity injections. So we have seen nearly 85 billion Chinese yuan via the reverse repo that have been given out to the market, households and to support the economy. And then $162 billion is what China has given out to real estate as a sector. Remember, there are a lot of unfinished projects in China which have been sold but not delivered. So China clearly seems to be working on that. But there is a bit of a concern that we see today coming in from China, and that is that China has stopped issuing visas to Japanese and Korean travelers. So this might impact the markets a bit. I mean, this is something that the street will not like. This could be a bit of a risk aversion as well. So that is one developing news that you have to keep an eye on. But apart from that, the sharp sell-off that we saw in the US dollar index overnight, dollar index is now trading at a 7-month lows, and that is going to be supportive. Also, elevated energy prices are still holding back smelting in countries like Europe and Africa, and those are some supportive factors for metal as a sector. So copper prices are trading at a 6-month highs right now. We have global copper smelting capacity lowest in 6 years is how it registered for 2022. Clearly supportive, and that shows in prices also. Zinc is trading at a 1-month highs, and LME zinc inventories are the lowest in last 90 or 95 years. We've seen zinc inventories decline by 90% in last year, and that's how we've started this year, with a bit of a deficiency, and that could be supportive for prices. Not just that, take a look at silver. That one is trading at an 8-month highs. We are looking at strong gains here, strong demand, and inventories which have declined by 70% in the previous year. Steel prices are trading at a 4-month highs. You have iron ore prices trading at a 5-month highs as well. So everywhere that you look in metals, we are trading at a multi-month highs. Here as well, there is a statement from China which says that the state planner is looking to ramp up the efficiency or watch on the price regulation here. They also says that they are going to crack down on malicious speculation that could be coming in for many of these commodities there. What the market also are bothered about is not just China, which is suspending visas for some countries, but also the weak economic data that we continue to see from China, from US and from Europe as well. But keep an eye out on today, because you have the US Fed chairperson Jerome Powell making a testimony today in the evening, and then you also have the US inflation data that comes out on Thursday. So a heavy loaded eventful week, and the markets are expected to be choppy. But at this point in time, the way the first 10 days of January have been, it is good going for metals, especially for copper and zinc. They have definitely outperformed.